Yes. So yeah. So now after that, we had also done one more seminar wherein the FTA had declared the public clarification consultation, wherein they had declared some of the provisions of the UAE corporate tax law, and those were discussed briefly. And today again we are gonna throw some light on the same topics again. So this will be the agenda of today's meeting. We'll be throwing some light on the taxable persons who will be the eligibility of the UAE corporate tax, the permanent establishment definitions, transfer pricing, which is very a related party, or if you have a group structure. Free zone applicabilities, again, it's this free zone concept is peculiar to UAE because there are so many free zones. So we'll throw some lights on what type of transactions will be taxable or not taxable for the free zone companies. Calculation of taxable income, how to calculate basic idea, tax groups, what are the advantages, disadvantages, adjustment and carry forward of losses, and the administration of effective dates, and then we can have a Q&A session. So this is the webinar link of the corporate tax event that we had done back in February, again with Tally. So in case you want to know the basic concepts of corporate tax, that what is corporate tax.
Sorry to interrupt, the screen is not shared yet.
Oh. Would have told me earlier. Now it's okay?
Yeah, perfect.
Great, thank you so much. So this is the webinar link of the corporate tax event that we had done earlier back in February. So wherein we had concepts of what is corporate tax and what is the rate of corporate tax, which is 9% that is being introduced by the UAE, when it will be effective, what are the basic applicabilities and exemptions and stuff. So you can also go and check out this link and see the webinar. So the first topic is the taxable persons, or the applicability of the UAE corporate tax. It will be applicable for sure to all the resident companies or resident individuals who are conducting business in UAE. So the definition of resident in UAE is that any person or any legal person that is incorporated in UAE and has a license, or even if it's not incorporated partnership, if they are conducting business, be applicable. If they are conducting the business in UAE, it will be called as the resident of UAE. For foreign companies, the foreign companies will be considered as resident in UAE if they are conducting business in UAE and that business is being controlled and managed in UAE. This is a very important concept of control and management. This concept is quite famous recently in India as well, wherein if the board of directors are taking the decisions of running the company outside the country through India, then whatever income has been generated in the outside country's business will also be taxed in India. The basic concept is, if you are you should pay tax in the country from where you are managing and controlling the business. It does not necessarily mean where the trade license is registered. So this is very important concept, where the taxability of many foreign companies who are conducting business over here via branches or through some agents, it will be important how their taxability will be considered. Yeah. And for the non-resident, it will be applicable, UAE corporate tax will be applicable if the income is derived from a permanent. So if a non-resident person has a permanent establishment in UAE and they are conducting business through that permanent establishment, then it will be taxable to them. And any income that is sourced in UAE, that also, on that income also, UAE corporate tax will be applicable. What is permanent establishment criteria for the foreign companies? It's a fixed place of business, or fixed place of business is quite simple. If they have an office and they have a complete setup of conducting business over here, then it will be considered as the foreign company having the permanent establishment inside UAE. Another is a dependent agent. So if the company has hired an agent and that agent is able to take the decisions without materially consulting or taking approvals from the higher authorities in the foreign country, then it will be considered that the is being managed and controlled inside UAE, and whatever income has been generated inside UAE will be under the purview of corporate tax. Transfer pricing, this is another very important concept that is going to be introduced with the introduction of the corporate tax. It's the benefit or the transfer or the transactions done between two connected persons. There is a long definition of the connected person. For individuals, related person or a connected person is any member of the family up to the 4th degree of kinship. So it goes from great great grandson to great great grandfather. So any of these people, if you are conducting any business or a financial transaction relating to your business, then it will come under the purview of transfer pricing. So the basic idea of transfer pricing is to make sure that when you are conducting a business or doing a business transaction with any of your related party or a connected person, you need the authorities need to make sure that by doing that transaction, you are not gaining any unfair advantage of the UAE corporate tax exemptions or the benefits that they have given in that. So to ensure that the transactions that happen between two connected person is fair, the transfer pricing concept applies, wherein they want to make sure that these transactions are being done at the market value of the goods or services that are provided, and the transaction is being done wholly and exclusively for the purpose of taxpayers' business. A very common and simple example that I can give you here: when UAE corporate tax was introduced, a lot of people here in UAE has family members or some relatives working in their company. So they would immediately get an idea, okay, so how do we save tax? We can increase the salary of our relatives and just save our tax. So these kind of transactions these kind of decisions when you take, please make sure that the criteria is there to check such kind of transactions, and it will be scrutinized, and make sure that the salaries, if you are jumping the salaries, it's justified and it's not only for the purpose of saving the corporate tax. Similarly, that was for the individuals and for the companies as well. If two companies are connected, like if two companies are jointly owning or have a 50-50 partnership or more than 50% partnership, it will be considered as a related parties, and any transactions between those related parties will the transfer pricing concept will apply. Free zone applicability. This is quite peculiar, as I said earlier, to the UAE. So what they have done, if you guys would have been aware, UAE corporate tax is applicable to all the companies registered in UAE, and it is also applicable to all the individuals who are conducting business in the UAE, whether they have trade license or not. The condition is, if they are required to have a trade license to do the economic activity that they are doing, then corporate tax will be applicable. So, but for free zones, if you would have known, when you register for a free zone company, the free zone companies have promised to their clients that if you register with our authority, then you, for 50 years, there will be no income tax, 50 years, there will be no corporate tax. And to honor that commitment from different free zones, the Ministry of Finance has come up with a special exemption. It's not an exemption because free zone companies will have to register for corporate tax, but it's a relief. the free zone companies will have to file the tax returns, but the tax will not be payable by the free zone companies. So the tax at the rate of 9%, which is applicable to mainland companies on their net profit, free zone companies, for free zone companies, it will not be applicable. Free zone companies will pay UAE corporate tax at 0%. Yeah, so free zone companies, all free zone companies will have to register for UAE corporate tax, and they will have to file annual returns, but they will not be liable to pay any tax on their profits, net profits. So in that, they have defined certain transactions or certain conditions that the free zone companies need to fulfill in order to gain that advantage. And also these conditions are also to make sure that the free zone companies don't take undue advantage of this relief that has been given to them. Normally, if you see free zone companies, when you register, technically, the free zone companies are not supposed to do business with the mainland companies. The sole purpose of creating a free zone company is either you have transactions with the other free zone companies in your free zone or different other free zones that are available in UAE, or you are doing business with clients that are outside UAE. So that is the main fundamental of a company. So the relief of 0% corporate tax will be applicable only to those companies who fulfill this criteria. So in the public clarification documents, they have also listed down various type of transactions that will be eligible for the relief, or it will be taxable. So we'll go through. So any free zone company who has transactions outside UAE, and then it's not a problem. They will get the relief of 0% tax rate. Transactions within free zone, again, same case. They will not be liable to pay any corporate tax. Free zone entities having branch in mainland UAE, in case this is the structure of your company, then in that case, the whatever income that has been generated by the mainland, by the branch which is in mainland, only on those transaction and only on the net profit of that particular branch, UAE corporate tax will be applicable at 9%. But the free zone company who is the head office, which is registered in free zone, it will continue to get the benefit of 0% taxation, provided their transactions are outside UAE or within other free zones. Passive income earned from mainland UAE. So if any free zone company or a free zone person conducting business, individual person conducting business, having a free zone visa, and they are earning income out of the sources. Now, passive income means either the interest is the revenue is earned through interest, capital gains, dividends, or royalties. This is called passive income, wherein you get the money without doing much of the activity, right? So if any free zone company gets income, passive income, or through the sources of interest, royalties, dividends, and capital gains, then such income will not be taxable at 9%, even if it is coming from the mainland entity. Okay. Transactions between free zone companies and their group companies in mainland UAE, again, in this case, they will give the relief to the free zone company, and the free zone companies will not be taxable for such transaction when they are doing transactions with their group companies that are located in the mainland. But for the mainland company, when they are making payment against any goods or services purchased from a free zone company, when they are making payment for such goods and services, those goods and services will not be considered as a deductible expense for the mainland company's profit and loss statement. Next transaction is sale of goods to UAE mainland company from designated zones. So we all, you all would have a decent idea of, let's say, for a company who is registered in a designated zone, for example, Javza, and that company sells good to a company that is registered in mainland, then the transaction is, when the goods pass through customs, the transaction is considered as it is the import done by the company registered in the mainland UAE, right? So again, in that case, the designated zone company does not charge VAT, and the VAT is accounted for by reverse charge mechanism. So same ways, in case a designated zone company is selling goods to a mainland company, then that transaction, on that transaction, there will be no corporate tax. So the benefit of 0% will be continued. But any other transaction or any other income generated by a free zone company, which is sourced from mainland, if that is the case, then the free zone company's whole net profit for the year will be liable to pay tax at the rate of 9%. They will lose the benefit of 0%, and they will have to pay corporate tax at the rate of 9% on all their profits. Because practically it will be very difficult to segregate net profit for each transaction that you have done. So just to give you an example, let's say a company, if there is a free zone company who has a, let's say 100 million turnover, okay, out of 100 million, 90 million turnover is from the transactions that are done with clients outside UAE or clients that are within free zones. But 10 million worth of transactions, the goods were sold to a third party in mainland UAE. In that case, when they, for the year, let's say 2024, when they take their net profit, which is derived from the 100 million revenue that they have, the 100 million sales they have done, let's say they do a profit of 10 million. So this 10 million profit will be taxable at the rate of 9% and not 0%. So all the free zone companies specifically need to pay great attention to their transactions. If they are currently doing any transactions with the mainland company or selling goods to a mainland company, then they need to seriously do an assessment of their business, of how it's going to impact their taxability, and what restructuring they can look at to save considerable amount of tax. One more criteria specific to free zone company is that in order to take the benefit of 0% tax, all the free zone companies will have to get their books of account audited on an annual basis. Calculation of taxable income, how it will be calculated. So corporate tax is a direct tax. So the tax will be calculated on the net income or the net profits of the company. So the basis of the calculation will be the accounting net profit of the company will be the base. Then you have to pass the adjustments for the limitations that have been provided, which we'll discuss in the next slide. The profit and loss of the company has to be normal accounting principles that are accepted in UAE. Mostly IFRS is applicable in UAE, but exemptions are being given. Okay, and the companies that are following the financial year for their particular financial year that they are following. But in case any company has not defined their financial year yet, by default the financial year will be the Gregorian calendar year, that is from January to December. One adjustment, as I spoke earlier, there will be some adjustments that needs to be given to your calculated accounting net profits and loss. So one such adjustment is for gains and losses. So in this, there are two types of unrealized gains they have categorized. One is capital unrealized gains and losses, and another one is realized gains and losses. What are the type of capital gain, capital unrealized gains and losses? One such example is, let's say, revaluation of assets or revaluation of investments, long-term investments, right? So to give you an example, if you have an investment in a property and you revalue the property, you have not sold it, you have just kept it for investment, and looking at the current increase in property prices, let's say you have a significant increase in the property value. So what do? You book it as a profit and increase the value of the property. So such profit is not realized. You have not sold the property. It's just in your books. It's in your hand. Just the value of the property has increased, right? So those type of gains are called unrealized gains. And since it is capital in nature, it will be excluded from your accounting net profit. So for example, for the year, you have a profit of 5 million. Out of 5 million, 1 million is through unrealized gains on capital assets, like investment property. Then your taxable profit, net taxable profit, will not be 5 million, but it will only be 4 million, because 1 million is unrealized capital gain. In case of revenue gains, unrealized revenue gains or losses, example can be given of revaluation of inventory or provision of currency. Sorry, doing provisions or currency adjustments. Then in such cases, it will be considered as part of your accounting net profit or loss, and accordingly corporate tax at 9% will be applicable. Revaluation of inventory is the perfect example, and I can give you an example of, let's say, gold companies. So a lot of companies that are in gold trading, jewelry trading, most of the times they don't also fix the price of their inventory which they have purchased from their supplier. They want to fix it at a later date to get the advantage of the rate of gold. So in that case, when you are preparing your profit and loss, as on the balance sheet date, you will have to value your inventory at the gold price, which is on the balance sheet date. And any unrealized profit or loss, you have to give an adjustment to the inventory and corresponding adjustment to the profit and loss. Now, this type of gain or loss is revenue related. It's not capital gain. So revenue related gains or losses will not be adjusted. It will be part of your accounting net profit or loss, and corporate tax will be applicable on that. Exempt income. There are few type of income that has been exempt. One such being dividends and capital gains. So any company or any individual who is earning dividends or capital gains by investing in some another company, then in such cases, that particular income will be exempt. But the criteria for the exemption is that the investment in another company should be more than 5% of the shareholding of the company in which you have invested. And in case you have invested in a foreign company, right, or a foreign subsidiary, and you are receiving dividends of that subsidiary, then it will be exempt only if the foreign subsidiary is liable to pay tax on their profits, which are the tax rate should be more than 9% or 9%. Those are the two conditions that should be fulfilled. Only then it will be exempt. Foreign branch profits, if the company in UAE has a branch outside UAE and that branch is making profits, then the exemption will be there only if the foreign branch where it is located or where it is registered to that particular country, and the tax rate is either 9% or more than 9%. Another exemption is for the operators of aircrafts and ships. This exemption is only applicable to the non-resident companies, and it will be only applicable if same treatment is given to the UAE-based companies who are into the business of operating of aircrafts or ships. Expense deductions limitations, as I mentioned earlier, in calculating your accounting net profit or loss, there are certain limitations with respect to expectations that will expenses which will be allowed. One such is the interest expense is capped at 30% of the adjusted EBITDA. So if your interest expense is more than 30%, then the amount above 30% will be disallowed. It will be added back to your accounting net profits. Any entertainment expenses that you are doing for your company, then those expenses will be allowable straight away only up to 50%, and the 50% will be added back. Any administrative penalties that you have paid and it's part of your profit and loss, that will be added back to your profits. Input VAT which you have already taken, that also will be added back if you have put in your accounting profit and loss. And donations paid to an unapproved charity, or if identified, they will be added back to your profits. The minimum interest cap of 30% will not be applicable to banks, insurance, or natural person conducting businesses. And for related party, interest deductible only with valid reason. And if the related party is also subject to tax at the rate of 9%, only then it will be exempted. Allowed, sorry, not exempt. Now, another important concept is the concept of tax group. Tax groups will be allowed, and the criteria for forming a tax group is a bit different from the criteria of forming a tax group as per VAT law. So we need to wait and see how it will be working, wherein there is already an existing tax group as per VAT law, and whether the same tax group can be registered as a tax group for corporate tax, that we'll have to see, because criteria there is some difference in it. But the concept is same. So if once two or more companies are registered as a tax group, then they will be considered as one company, and they will have to file the tax returns only one. They don't need to file for individual companies. And any assets that are transferred, we'll see the benefits of tax group in the later slides. Each slide will have a different and understanding of it. Responsibility and administration of tax group. So as I mentioned earlier, tax group will be treated as a single taxable person. Parent company is responsible. So the representative company will be responsible for the administration and payment of corporate tax. The parent company will have to consolidate the financials of their own and all its subsidiaries, and prepare one consolidated profit and loss report on which they will have to pay the corporate tax. And obviously, when you do consolidation, you have to eliminate all the intra-group transactions. Even if the parent company is responsible for the administration and payment of corporation tax, each individual company in the group is also jointly and severally liable for the obligations. Who can form a tax? Any companies, or where a parent company is holding 95% of the shares and voting rights of its subsidiaries, only in that case they can form a tax group. And also one more condition is that the subsidiary company should not be an exempt company, or it should not be a free zone company that is having a relief of 0%. Okay. And all companies who are or who want to be a part of tax group, those all companies' financial year should be same. It is not possible that one company in the tax group is preparing financial, or it's following financial year of Jan to December, and another company is following from April to March. So all the companies should have the same financial year. Only then those companies can form the tax group. How to submit the application for a tax group? Any group that wants to submit or wants themselves to get registered as a tax group, a notice will have to be sent to the FTA, which has to be signed by the parent company and all its subsidiaries. And then only the FTA will, you need to follow the procedure as per the FTA, but a notice will have to be signed. That we are doing for VAT tax groups as well. Transfer of losses, your losses, if in case after the applicability of the corporate tax, let's say it is applicable for many companies, it will be applicable for the year 2024 from Jan to December. Those companies who are following Jan to December as their financial year, for them it will be applicable for the year 2024. So in case these companies make losses in the financial year 2024 or 2025, then such losses can be adjusted or can be carried forward to the next financial year. And in next financial year, if you have made profits, then your past losses can be adjusted against those profits, 35% of the loss. So it will keep on being carried forward, and every time the carried forward loss that you have, 75% of that carried forward loss can be adjusted against the current year's profit. Also, transfer of losses is possible between group companies, wherein the criteria of 95% ownership is there. Only then it can be transferred between two. And no losses can be transferred from the exempted company or are having a benefit of 0%. That is obvious. If they are not liable to pay tax and they have done, they cannot transfer it to another group company, even if they have the 95% shareholding relationship. Intra-group transfers. The intra-group transfers is companies that are, that have 75% ownership. 95%, it's at least 75% ownership in another companies. Then any intra-group or liabilities done between these companies will be exempt from corporate tax. But another criteria is such asset or liability transferred in the group should remain in the group for at least 3 years. And also the asset or liability that is being transferred should be at net book value and no profit or no market. The net book value, what is being present in one company that is transferring, that same transaction should happen at the same value, at the net book value. If any of the above conditions of 3 years or net book value are not fulfilled, or anytime they are being violated, then any gain or benefit that is achieved by such should be taxed. Restructuring relief. So if there is any mergers or acquisitions happening between the group, or then such mergers and acquisitions or any kind of restructuring will be exempted from the corporate tax. But again, there is a condition of such change should remain for at least 3 years. And also, if any purchase of shares is happening, that should be done at the net book value, or if any transfer of assets or liabilities is happening, it should be done at the net book value. Administration wise, we all know the effective date of UAE corporate tax will be for the financial year starting after 1st June 2023. So if, as I mentioned earlier, if your company is following financial year as Jan to December, then for such companies, the corporate tax will be applicable for the year 2024, that is starting from 1st Jan to 31st December 2024. Registration is mandatory for all companies, whether it's a free zone company, whether it's a mainland company, whether it's designated zone company, whether it is a financial free zone company. Registration is mandatory for all the companies that are here in UAE, and also for individuals who are conducting business with the trade license. So all of them will have to register. Return filing will be within 9 months from the end of the financial year. So if you have a Jan to December financial year, it will be applicable for the year 2024. File their return and also make the payment of corporate tax liability within 9 months. So that will be like before 30th September 2025. You will be filing your first tax return and also paying the corporate tax on the profits that you have done for the year 2024. I hope that's clear. What should businesses do now? So as you can see, with the introduction of corporate tax, there are a lot of complications that are going to come, lot of the clauses of the law that will be applicable, that you need to be aware of in calculating your, making sure that your figures are tied up where it can be cross-verified with your VAT returns, or if you're filing economic substance regulations, it can be cross-verified from there as well. So you need to make sure that your books are being managed by a professional accountant. You make sure that each entry from now, start making a habit that from now each and every entry that is going into your profit and loss or your balance sheet, basically your books, is it being recorded in a correct way? For companies, those are still managing their books in Excel, I highly request you, please, trying to get a good accounting software that will help you manage your financial records quite efficiently, and also will help in case there is a consultant, tax consultant you are hiring. It will be a great help for him as well to understand and your returns are filed correctly. Because even during the VAT, it was simple, wherein only what you sold, you had to charge VAT on it, and what you have purchased and you have paid VAT, you have to keep record of it. But with the corporate tax, it becomes quite complicated, where there will be an accounting profit which will be calculated by you. Then you have to pass the adjustments as per the limitations or the deductions. There are limitations in the deductions. So you need to be sure that your books are correct and at all times. If you have any backlogs pending, please make sure that those backlogs are also accounted correctly and you have proper record before the start of the corporate tax for the financial year that will be applicable to you. Proper classification of chart of accounts is another thing that you need to start looking at. Until now, since there was no corporate tax, and if in case there are many companies in UAE, I have seen the culture wherein even the personal expenses are being put in as the company expense, but these needs to be resegregated. Now you need to properly classify your expenses as to whether it is a personal expense or whether it is entertainment expense. Earlier it didn't matter if you put an entertainment expense into an admin expense or entertainment expense. Now it will matter. You need to record it correctly, because in case there is any violations, again, there will be penalties for it. Annual audits, we strongly suggest the companies who are not getting their books audited until now, please do get it audited, because the person who will audit the books, please audit in such a way that they can give you suggestions with respect to the upcoming corporate tax provisions as well, whether your books are in line with the requirements of the corporate tax, because that will be a great help and it will be a smooth journey for transition from to being start paying the corporate tax. We also highly suggest to prepare your accounts wherein the person who is doing the accounting entries, he has full idea of which expense, how it has to be recorded, where it has to be recorded. Also, restructuring is one option, as I mentioned earlier. Being a free zone company, if you have transactions with mainland companies, if you are selling to mainland companies, or being in a mainland company and you have a lot of exports, then look at how you can restructure your business so you can do a proper tax planning where you can save some corporate tax. I always say that there is very thin line between tax evasion and tax planning. Tax planning is legal. There is no problem in it, wherein you being staying in the purview of the law. You are just taking provisions that are provided. Tax evasion is tax evasion, and it can land you in jail and hefty penalty. So no need to explain that. Now, businesses should also whether with the impact of 9% on their, do they need to increase the profit margins? Do they need to increase the price of their products or services. That also is a decision that business need to take. They need to analyze their business, how it's going. Competitors are going to take decision for this, and accordingly price your product accordingly. Great, that's all from my side. Thank you once again, and over to you, Mr. Abhimanyu.
Thank you, Samir bhai. Thank you so much for this knowledge sharing on corporate tax. I see a lot of questions here. I would request everyone to please keep pouring us with your questions. We will be answering all of them by the end in a Q&A session. I would now like to introduce the Managing Director of Chaturvedi Software House, Mr. Praveen Chaturvedi, to take us through a small session on how we had handled VAT when it was out, and to tell us something about his company. Praveen sir, over to you.
Thank you, Abhimanyu, as well as thank you, Samir, for wonderful coverage of that information. I hope it will be very helpful, and I'm very sure that it will be very helpful for all of the businesses to do a proper tax planning and all. Now, I'll start the screen sharing. Abhi, can you confirm my screen is visible to everyone?
Yes, Praveen bhai, we can see your screen.
Yes, thank you. So I'm Praveen. I'm Managing Director of Chaturvedi Software House. We are a 16-year-old software consultancy, which is catering to the business for their business management software purposes. And today I'm going to cover the corporate tax, which is going to be introduced in the country from June 23 onwards, and how that it can be related with the VAT being implemented in 2018. So before I will start, I would like to share one very important thing, that when the VAT was introduced to the company, there was some stats which I would like to describe to everyone, that we were ready with that VAT product in December 2017, well before the VAT introduced to the country. And before that, from January 2017, the VAT was announced that it will be implemented from January 2018. And February 2017, we started our event series of events we did. So we did many events to create that awareness in the market, how businesses can be well prepared with the VAT, and similar manner we'll be well prepared, and before time we will be ready for corporate tax as well. So I'd like to share some stats. When the VAT was introduced, we connected over 40,000 businesses in one-to-one and online with many sessions. We conducted more than 700 VAT enablement and awareness sessions across UAE. Those were online as well, offline. Okay, so we did some events in the hotels and all, and there were many webinars done. So sorry. So we touch base all our customers for this purpose, so that we are we wanted to ensure that all of our clients and customers and our business contacts are fully enabled to be VAT ready in Tally. Okay, we run a full-fledged campaign in VAT for Tally to create that knowledge sharing through Facebook, through videos on YouTube, as well as we shared this kind of, like, this presentation is there. So we did so many presentations, and those recording also we shared, and whatever the PDF and all and the small artworks were there, we shared a lot of that information with all of the customers. Now, I would like to cover one very important aspect, which is keeping the record. FTA says that every business has to maintain 5 years of records. Now assume any business keeping a record, a physical record, which is on paper, it takes a lot of time. It takes a space. If not a warehouse, at least a sizable space in our offices. Okay. And it costs a lot. So instead of keeping those records physically available, we can have that digitally scanned and digitized records, which can be indexed and can be retrieved with better efficiency whenever it is required in future. So what are the benefits of scanning? It reduces your storage, as I mentioned. Quick access. So 28% of clients consider the accessibility of record to employees, their business are very pure. So these businesses whichever are there, most of the time to refer that old record, it become a nightmare if you need to dig out an invoice or a voucher which is 4 year old. Then what FTA, then it is very, very cost effective also, and effective information that whatever system you are following, it can reduce your cost as well as it increases your productivity by a great percentage. And the information security when introduced, it increases your data confidentiality and organization integrity as well. Last but not the least, it is increasing that entire organizational productivity. What FTA recommend on digital copies? So you can see this point number 2, in which that FTA is saying the information retained or stored in either photocopy or electronic form and easily readable. It can be reproduced within a reasonable period if requested by the authority. Okay, so this is what FTA says about the digital records of whatever supporting documents we used to maintain. As per FTA, right now, the 5 years, which is going to be in corporate tax also, it is going to be same. 5 years of record, previous 5 years of record are mandatory to maintain. Now, how digitization help? It help you in analyzing, scanning, and organizing by indexing. Indexing is a process in which that digitization, whatever the key phrases are there, you can search them later through some search bar or something. So that digitization helps a lot to maintain the records. Now, how VAT reports, when this VAT release was launched in December 2017, from there are so many, there are very few changes came from FTA. Those were incorporated way well in time only. And how VAT reports in Tally work. So I'm just giving you an idea that the way we did for VAT, it can be done very efficiently for corporate tax as well. This is the bilingual invoice, which comes for English and Arabic as well. So there are few more businesses who may be working in some other languages, or they may have employees who are working in those languages as well. They can contact Chaturvedi Software House. We have more than 10 languages dictionary available with us, which is to name a few of them are Swahili, Portuguese, French, Russian, Chinese, like that. So this is bilingual invoice, which is a requirement in Saudi Arabia. It is not mandatory in UAE that you have to have both the languages, but it is great to have both the languages in the invoice, which is already there in the default product. Very easily and very efficiently, anyone can update the TRN details and that addresses and all in that ledger list, or whatever the creditors are there or debtors are there. You can update it very efficiently and very easily. Even though if you have an Excel, you can import it directly from there as well. Now, this is something which many businesses who are not using Tally are struggling to account this. In Tally, you can do this very efficiently. It gives you what all transactions are there, which comes under the purview of reverse charge, and whether these are my imports or these are my intra GCC inverts. Those all can be segregated. Right now, it is working that rest of the GCC is also acting like rest of the world, but as per VAT law, it has to be mentioned separately. So reverse charge very efficiently by one click. You can see this stat adjustment, this button. By clicking one button, your entire reverse charge can be booked immediately within a few seconds matter. Now, there are many businesses who take advances from the customers in a tax period, but the invoice is booked in further period. Now, as per VAT law, that advances you have taken, a VAT liability has to be created for those all advance receipts. And for that also, we are doing it very efficiently in Tally. By one click, same stat adjustment, you can book that liability of VAT for this receipt. And whenever that invoice is raised, it can be reversed very easily again. Now, this is the VAT 201 form, which is there in the Tally itself, which covers all this outwards, local supplies, GCC supplies, outside GCC supplies, then outside GCC are exports. So then, which I was mentioning before, advance receipt as well as the reverse charge, it can be booked very easily. So it will give you whatever your outwards are there, then reducing whatever input you have, and it will give you the net payable to FTA. Now, if you can notice the first 4-5 lines from this total vouchers, included in return, not included, not relevant for this return, and uncertain transactions. So whatever transactions are not, I mean, there can be chances or the VAT or this expenses booking and all, the TRN is not allocated properly. Those comes uncertain transactions. Okay, so uncertain or information required for generating audit file. So whenever any inquiry comes from FTA, of course, for that you should have a qualified tax consultant. But this information will also be very helpful. That audit file they ask most of the time, which to generate that audit file, these 9 vouchers are having this much of information lagged. Okay, so if we'll update this, our audit file can be generated within a click and a matter of a few minutes. That entire report will be exported, and you are happy, FTA is happy. This is the proper VAT form as per the portal of FTA, which can be generated as PDF and stored in your digital records. And if you are still willing to store that hard copies, you can file it there. So it has various blocks, which every block has its own definition. And this is all about VAT, how we were well prepared. Similarly, when this details will come and corporate tax will be introduced to the country, we'll be ready with that corporate tax ready release in Tally. That's all from my side. Now I'll hand it over to Abhimanyu, and we can start Q&A. Over to you, Abhimanyu. Thank you.
Thank you, Praveen Bhai, for this insightful session. I would actually request both the speakers to come online now because we have some questions. So if we could just get them answered. Sir, can you see the questions or do you want me to read them out one by one?
I can check it. Not an issue.
No problem, sir. Okay, I'll start. So Mr. Kapil is asking if branch is in FZE and head office is in mainland, then is it taxable? Question mark.
If branch is in free zone and head office is in mainland, this particular scenario has not been mentioned in the public clarification. So if it's silent, it means that yes. See, what is branch normally? A branch is just an extended arm of the head office. So when you are preparing the financials for the head office, for sure you will have to take the sales revenue, the complete PNL of the branch. You will have to consolidate to your head office books. Then only it's proper financial statement for that particular head office. So when as of now, the law is silent on it, so I believe it will be taxable.
Thank you, sir. Lane Guard is asking, is a medical center included in corporate tax?
Okay.
Abhimanyu, the questions asked by, I believe, Khushbu Popat is also because I believe she has shared her link with some clients. That is why the name is appearing same. So you can ask those as well.
Okay, I'll read them out as well. Yeah.
Yeah, this one, the last one, Praveerji, you are answering?
The medical center, it depends if it is in mainland, of course it will be in mainland. And if even if it is in free zone, the beneficiaries will be of mainland. Mainland medical center will be in the purview of corporate tax for sure.
Okay. So one question is, what about free zone parent companies with branches within same or other free zones? One doing local business while the other is doing international only.
So again, if it's a branch, same explanation that the branch is just an extended arm, and if both free zone head office and branch both are free zone companies, and one is providing or generating income from a local company, then the whole companies, including branch and head office, profit and loss on that 9% will be applicable. The relief will not be given to them.
Okay. Mr. Rajiv Thakur is asking, how is unincorporated partnerships income will be taxed in the hands of individual partners? How will the route be identified?
So it's internationally practiced as well. It's the concept of transparent company, wherein they don't see the entity and directly the whatever the profits are being done, then percentage wise in which percentage they are having the partnership, in those percentages it will be taxed at the hands of the individual partners.
Okay. One question, applicability of tax when free zone company earned revenue from sale of services to mainland company.
Same, any free zone company, actually they should be doing business with either free zone companies or overseas. If they are doing the businesses with mainland company, it comes that whatever profits are there comes under the purview of corporate tax.
Right. Following question, any reliefs of DIT as per DTAA agreements?
So the reliefs will be there, but the main criteria, see the whole logic behind DTAA agreements is that the same profits are not taxed twice, right? So if the company, or let's say there is a foreign subsidiary or a foreign branch, and that foreign branch or subsidiary is paying tax which is more than 9% or 9% in that particular country, then it will be exempt here. That is the relief.
Okay, sir. Mr. Jitendra Chaturvedi is asking whether the company can have different accounting year.
Same company can have different accounting year. I need more understanding, but I'll try to answer. So each company in UAE can have their own financial year of their choice, accounting year of their choice. It's not mandated that all companies throughout UAE has to follow Jan to December or April to March. as their financial year. No. So they have given this flexibility, so each company can make their own choice of keeping their own financial.
Okay. Ms. Hazel is asking, are LLC companies under novelties trading activity subject to corporate tax?
Yes, it is. It is LLC is a mainland company.
The corporate tax is not based on carrying. It's applicable to all type of activities, all type of companies. So there are no exemptions as such in
Right.
that case.
Right. Thank you. Mr. Dawood Khokar is asking, flexibility of free zone company. One, purchase of goods by a diesel entity from mainland and exported outside UAE, 0%. And two, from diesel entity to mainland companies on RCM basis, 0%.
Yeah, both are 0%. The first one, second one, I have already covered in my presentation, that any sales of goods by a designated entity to mainland company will be 0% because RCM is applicable as per VAT. The first one, where in the designated zone goods from mainland company and it is out exported, for designated zone company, they will still continue enjoying the benefit of 0%. But for mainland company, it's going to be taxable. Mainland company exporting through designated zone or directly exporting, whatever net profit they are going to do, they have to pay tax on it. There is no relief.
Right. Mr. Jitendra has one more question. If a company is under loss in previous years, whether this loss can be carry forwarded once the corporate tax is introduced?
No, that is why when I was explaining about losses, carry forward of losses, I told losses that you have incurred after the corporate tax is introduced, not before. That will not make sense. Otherwise, all companies will post huge losses.
Right. I think it also answers one more question, but I'll just still repeat it. So Olufemi is asking, on loss transfer, is there a limit to the number of years for which unrecovered loss can be carried, or the loss can be carried forwarded till it's fully recovered from the subsequent taxable profit?
Yes, a good question. This one, yes, it can be carried forward until the full loss is recovered from the subsequent taxable profits. But there are certain conditions. One such condition is the ownership. When the loss that occurred taxable period, at that time, what was the ownership? That same ownership should continue, or more than 50%, 50% or more than 50% ownership shareholding should continue till the complete loss is adjusted. Or the second condition, after the transfer of ownership, the new owner should continue carrying on the same business. There is no change in the business. So if those two conditions are satisfied, then the loss can be carried forward indefinitely until they start making profits and it is adjusted against them.
Okay. What is the registration process?
Registration process, I believe FTA has invited us for a webinar to discuss on the registration process, but when it will be available, that is not clear as of now. We believe it should be anywhere in first quarter of 2023 or max by second, has to be by second.
Mr. Dawood, there's one more question. What are the threshold for salaries paid?
Not clear yet because the public documentation that was available, it does not say as of now, but for sure there will be a cap on it because it will come under related person as well, partners and managers. So there will be a cap to the remuneration paid to the management. Next one. Abhimanyu.
Abhimanyu, you are on mute.
Sorry, sir. My bad. Sorry. One question. If any supply free zone to free zone, it will be taxable or not?
No, it won't. Free zone to free zone, it's not a problem.
Sanu Thomas is asking, in view of corporate tax, what are the limitations we have to make a provision for expenses? And what are the documentations required to do the provisions for expenses?
See, with respect to provision, if you want to make, there has to be a justification as per the accounting standards. You should make provisions. So there won't be, if the accounting standards demand that you need to make a provision, go ahead and make a provision, and proper supporting documents will be required. That will depend on what kind of provision you are making.
Right. Mr. Harish Gopinath is asking, a company registered in Javza is owning will the rental income be taxable?
Depends on the activity of the company, and if the activity of the company is renting out properties, then yes, it will be.
Okay. One question is, please tell me if any or supply free zone to free zone will be taxable.
It is all within free zone, so it is already covered by Samir before.
Right. Faisal Amin is asking, will there be deferred tax accounting consequences as a result of temporary
differences arising? For sure, it will be there. For sure.
Okay. Janice is asking, we have two companies in the mainland. One company is dealing in local customers mostly, while the other company caters to customers outside UAE. These TRN. Do I repeat it, sir?
No, these two companies have one TRN.
One TRN. Is it a good decision to open a new company in free zone catering our customers outside UAE?
See, again, you need to do that assessment. You need to do the analysis. You need to do the feasibility for because in this finances are involved. So how much it makes sense, how much it doesn't make sense, that you need to look into.
Yeah. Noor is asking, what is the starting date of the corporate tax? June 1st, 2023.
So if any business, it depends on the financial year of that organization. Let's say your financial year is July to June, then it will be for that company, the applicability will be from 1st of July. Or if your financial year is starting from 1st January to December, then for the previous one, it will be 1st of July 23. And for January to December financial year companies, it will be January 24.
Thank you, sir. Yeah, Tawhid Ahmed is asking, transfer pricing purpose is to shift income. But suppose if we are doing transaction internationally with Indian company, which is situated in India, which has higher tax than UAE. So these transactions, will the transfer pricing be applicable?
See, transfer pricing provisions, the UAE will be following the OECD guidelines. So according to it, if any transactions are happening between two connected persons, then it will be applicable. You have to follow the guidelines of OECD.
Fazal Beg is asking, what if UAE mainland is outside of UAE? Will it be taxable in UAE?
What if UAE mainland company providing service outside? Yes, any mainland company providing or doing out of scope sales, doing export sales, whatever net profits they are going to get tax on their net profits at 9%.
Rintu Jose is asking, corporate tax exemption is applicable for the new companies established in free zones on or after 1st Jan 2023?
Good one. When you after 1st Jan 2023, or even now, if you are registering a company with free zone, please do make sure to check with them whether they are giving you the benefit, or they are giving the benefit of there will be 50 years no corporate tax, 50 years no income tax, because that's what is their main point of considering a company set up in free zone.
One last question. Chanak Bhatia is asking, can we charge the director remuneration in profit and loss as expenses?
There will be a limitation to it as a percentage of profit.
Right. Okay. Thank you so much, sir, for the questions. Yeah. So before we end, I would just like to close the session. Firstly, I would like every single person who has joined this session